To start with, what we want to give you some perspectives to build on what we feel is a fintech's role in making sustainability and sustainable products accessible to the retail. So if you really look at the world, there are, it's kind of a divided world, which says, there are certain folks who say we should do something about it. Yeah, the climate as one of the aspects of sustainability is impacting us big time. And if you're somebody like me who works out of Bangalore, the whole intense rainfalls these days and the whole flooding and everyone getting stuck was an awakening call as well in terms of the changes that we do are impacting our environment. And then there are the other set of folks that who ends up saying that, look, I'm just an ordinary person in this world. There are big big companies out there who are polluting the environment or causing these problems. It's a problem for them to solve and not really for me. And that divided world is what we witness. And I'm just hoping that at least my optimism in me sort of leans towards the left side of things. At least there is an awakening that we must do something is growing. And that's where we feel the power of data, the understanding of a consumer intent and the tech, plus the finance aspect of it can make a huge difference. Couple of paradigms I want to sort of start giving you a perspective. One, in terms of a pure economics, if you really look at from a demand and supply point of view, right? There is this supply side of things, which is when you talk about the energy and the big players out there, and some of the stats shows that most of the harmful gas emission has been done by top 100 companies in the world, right? But then they continue to produce these energy, fossil fuels, and other sort of gases, fuels, because there is an inherent demand that's as well happening, right? And the demand is coming from either the growth in economy, or there's an ask from the retail side of things that, hey, I want to use it, I want to have a better lifestyle. Can I have that energy, sort of a thing. So I think there's while there are a lot of action happening in terms of controlling the supply side of things, there's much more action needed on the demand side of things, and that nudge and that push is something that we feel fintechs who can deal with people at the retail level, where the mass segment is there, can really help. And the other perspective that I want to give is that of two options that are two kind of options that are there. One is of a mitigation and one is of an adaptation, right? Mitigation is where we see, look, how can I reduce my impact on on greenhouse emissions and other sort of sustainable actions. And the other one is adaptation. Now that the damage is already done, we are already in a phase where most of the damage has been done. What can I do about it? What can I innovate to make sure the physical impact is less? So hence, I think the problem space is actually much bigger for people to pick up and do that. While this is one perspective of it, the other perspective of it is the whole, when you look at big financial institutions, they have both from running a sustainable business, there are two sets of coins as well. One is the credit and lending part of it, which brings in the money to the bank, which they continue to do to some of these big corporations who are uh, causing a lot of harmful gas emission on the planet. And there is the other set where there is an investment arm of it, which who keep selling green bonds and green investment options as such. So that's the kind of a paradox. And beyond that, there are a lot of other stakeholders who are getting impacted with the views that people take, right? I mean, even your employees, I think there's a need to align with the purpose of what your company stands for. Um, and even the consumers as such, in terms of what is the consumer looking to from an organization. Are they just creating and producing goods that's there, or is there a purpose that I can associate with that organization with? Given this backdrop of where we are in terms of standing on different paradoxes and different decision points and sort of a bit of a confusion state as well, we want to dive a little deep into how fintechs can play a role and how retailing of these products and offerings can really help. And I'll pass it on to Mahima to touch upon some of these aspects.
Thank you, Murali. I hope I'm audible as well. Okay. Like Murali said, right, the FS industry is trying to balance in terms of approach. They're trying to balance their business as well as the products that they're launching in terms of sustainable theme. And I'll talk about how this approach is being taken by the FS industry in the current scenario. Yes, they've been innovative. They have had product portfolio which are linked to sustainable, loans, and they are trying to finance projects which have a lot of green targets to meet. They have sustainability linked, KPIs to meet, and the investments are also taking into consideration the finance of those projects accordingly. They also have green bonds to tap into the larger, institutions and have access to the capital accordingly. But the business and the decision models that are coming out as a consequence are, some things like carbon credit exchanges, which, like Murali was explaining, right? The mitigation versus the adaptation aspect of it. Carbon credit exchange is something similar to, okay, I have burned, some carbon over here. How do I balance it out by buying some credit? So it's offsetting between regions, it's offsetting between businesses, but not really, mitigating the risk that is there. Similarly, with ESG ratings influencing the capital access is driving the money towards more green projects. But then, I mean, how does it really nudge the behavior of, the end consumer towards it is still remains a question. So I guess what I'm trying to say is that the buyers and sellers involved are still corporate and institutions. For example, if you Google the term sustainable lending, right, the first definition that comes on Google itself is business seeking loans. It does not come as anyone or even individual seeking loans. It categorically calls out businesses seeking loans as, sustainable lending definition. So those are the entities involved right now. And what that culminates into is that the role of the FS industry is that of an enabler, of a mediator, of making sure how the capital flows from, one institution to another, given their ESG rating or carbon related or sustainability related targets. So that's the role they are playing right now. Next slide, please, Murali. Now, how do we expand the base or larger involvement or participation from just these corporations and institutions to the retail customers, which is the theme of the session today, right? I mean, even as an individual, the first slide mentioned about the paradox. We don't want to think that it is only for the big guys or big institutions to do something about it. We want to involve the whole planet regarding sustainable, spending or sustainable behavior. Financial services firms are already doing, I mean, largely it's related to corporate related business dealings, but there are already some innovations happening, and we'll cover some examples over here. For example, if you look at lending, right, there are already lending products which link the interest rates to the purpose and the behavior being surmised by the loan taker. There are top banks in India which are offering about 0.5 or more interest waiver on new electric vehicle loans. Now, I mean, just as an idea, it can be extended to educational loans where somebody is going for a policy making or a sustainability related course, environmental engineering. So the interest rates could be differentiated to encourage an education or a social sustainable capital theme, where you can encourage it accordingly. If you look at payments also, I mean, NHAI has drafted a toll policy, which they recently released, where they are proposing heavy concessions again for electric vehicles. Uh, UPI charges are also being considered for variable transaction charges, and sustainability can form one of the themes for the framework basis that, right? Wherein we can look at the nature of the basket of purchase or the mode of transaction. Even MDRs can be charged or on a differentiated basis depending upon what kind of products are there in your baskets. Insurance, we are already seeing, insurance industry little ahead, where pay as you drive insurance has already started to exist. And interestingly, what, such themes also do, and insurance is a good example there, because it keeps the collateral value in check. Now, if your behavior itself is nudged towards safe driving, because your premium would be down if you drive well, right? Pay as you drive, or if you don't drive as much, then naturally the vehicle remains, chances are it will remain in a good condition, and the collateral value itself remains balanced, which takes care of the economics or the business versus the, the economics paradox. When it comes to investments, yes, I mean, the green bonds are there, the sustainability linked investment opportunities are there, and now they are being made available to the retail customers because these green bonds are now part of ETF baskets, they are now part of mutual funds, and it just increases the awareness, right? As more and more such products are made available to the retail consumers, the awareness also increases. ESG rating based indices exist now. One good example we are also seeing in European countries is there are now charity and donor funds where you are not forced to decide today that if you have set aside some amount for charity, then where do you give it? You're not forced to decide today. You can keep investing in a dedicated fund and the fund will grow, but you cannot withdraw, right? And when you are able to identify an entity to donate to, you cannot withdraw, right? You can only donate to an entity which you can identify sometime in future, which is aligned with your purpose, with sustainable theme that you have in your mind. Then you can direct your funds to send to the specified amount there through that financial institution itself. So those kind of investment products are, already launched. And last but not the least, savings, very close to heart for us Indians. There are green deposits with higher interest rates being offered by some of the banks, and they just allow you to match your money with your values because the interest rates are higher, and those deposits then will be used to fund or to be lent to green projects only. Overall, what these kind of products, when they go to retail, I mean, these five ideas are not limited to, but they represent the major kind of financial offerings to the retail customer, and they act as a force multiplier of getting the customer on board, the retail customer, and expanding the universe of sustainable finance. Now, why do we think that fintechs are best placed from product and tech innovation perspective to take this reach to the retail customers, and how actually they are well placed to do that? If you see on the chart on the left side, right, I mean, as the opportunity is there, we realize that, like happened recently with the lending fintech policies also, policies and standards, the clarity takes some time to come through, right? Industry grows, so does the understanding of the regulators themselves. And mostly the banks, the age-old, larger financial institutions, they prefer to remain in the incumbent zone where they wait for the clarity to happen before they can really take advantage of opportunity space, which is not the case with fintechs, which really belong to the innovators zone. I mean, as the clarity on policies come, the consolidation starts to happen. But initially, in that initial stage, of uncertainty, fintechs are more agile, fintechs have better risk appetite, and fintechs being the face, the direct access to the consumer, they actually create, the bite-sized offerings to the consumers. They start with specific product market fit, and hence they are able to create that bite-sized offering. They are able to change their portfolio very quickly. They are much more agile to experiment with, and that places them very nicely to even work on sustainable products, because there the policies and standards are not as clear. And we'll see, we'll hear some what's happening in the regulatory space, little bit of that also. But fintechs being that innovator, they can create that required network effect, they can create that required positive impact, and be the facilitator not only for the access, for the awareness, but also to couple the sustainable behavior of the consumers to the offerings which are sustainability purpose linked. And in return, obviously, they gain the larger customer base. Now, what are some features or the characteristics of fintechs which actually make them well placed to be able to do that? Uh, Firstly, I mean the customer experience, because they are the direct connect to the end consumer, right? They are able to give the enhanced customer experience. They are able to create that kind of a satisfaction, in the heads of the consumers, that they are doing their bit for the planet, right? I mean, government, of course, they can exempt green bonds from tax and everything, but for the customer to perceive that what they're doing is actually, they are able to do their bit for the planet, whether or not there's an economic benefit to them, is something that, fintechs are very good at creating that CX element. And because of that access to the consumer, and consumer, naturally, they have access to the data and the corresponding insights on consumer behavior. Now, how the consumer behavior is getting nudged towards sustainability, forms the input for new products, forms the input for new services. For example, an insurance tech related or a fintech firm is able to assess that how consumers are adopting pay as you drive insurance, then maybe a payback loan as you drive, it may see traction too, right? Because retail data reflects mass behavior. And it is a very valuable input for even institutional projects or green investments. For example, if we realize that customers are going for more solar panels because the loans are cheaper, then it can be an input to the green targets for an electricity project. Green targets could be reset over there. So that data and insights are very critical, and fintechs are the channels for those. And in turn, they are able to position themselves through their products and offerings, and that the corresponding AUM that they are getting, that counts towards the ESG goals for the bank and the fintech itself. Coming to the regulatory support, right? I mean, RBI, like last year, they created the Sustainable Finance Group in 2021. And earlier this year, they conducted a survey of the banks to assess the status of sustainable finance in commercial banks. And I'll quote one statement from the report. A majority of the banks did not have a separate business unit or vertical for sustainability and ESG related initiatives. I mean, this just goes to show that the regulators are also inclined, and they are monitoring and assessing how the financial industry is moving, making gains towards sustainability initiatives, and whether or not they're giving it a very separate, independent focus or not. Right. And naturally, as fintechs adopt this theme, they will get the regulatory support, uh, potentially, because if the business models and products are aligned towards it, then naturally it will get the regulatory attention. And then they are able to do personalization because of all these things: the data insights, the positioning, the regulatory support, offering basis the consumer behavior. Banks today allow payments, they allow shopping, they allow transport booking through their apps, and you can cross sell, for example, nature trail related vacations versus luxury vacations to a sustainable conscious customer. Eventually, I mean, everything, it just leads to scalable customer access for the fintechs, for the whole financial world, mass adoption of these retail offerings, which are aligned with sustainability, and this force multiplier, it's will act towards a planet-wide sustainability with an expanded customer base for the fintech itself. Murali, next slide, please. So just to summarize, what we recommend and approach for the fintechs is that they should envision their role to that of a doer or a champion of sustainable finance, not just as a facilitator. Effectively, I mean, the buyers and sellers, they're thinking about buyers and sellers need to expand from institutions to retail customers, both for economic needs, loans and investments, and daily aspects, payments. We saw some examples. And the business models and the decision models will automatically align towards, increasing the access, increasing the awareness, and, coupling the offerings and nudging these consumer behaviors towards more sustainability. The product portfolio, we saw some examples, are already, moving in that direction. ETFs and mutual funds giving access to green bonds and ESG related instruments. There are retail loans which are sustainability linked, behavior linked insurance, and transaction charges is something that the industry is mulling about. But something to think about, that even the transaction charges can be themed around sustainability linked behavior. Murali, I'll pass it on to you back.
Thanks, Mahima. And Mahima kind of explained in detail in terms of how fintechs can champion this. And I think one of the points that I wanted to add is, technology has been a great enabler, and with that, and the fintechs have been able to create simpler, cheaper, and more secure and accessible products to the retail consumer. And if you really look at the adoption of and the participation of retail in finance, be it look very simple in terms of how many investors are participating in the equities market or in investment market, that itself shows how the investor populism is also kind of helping that, right? And these are sort of causes and movements that we are looking for in terms of making that huge impact as such. But solving one product market fit problem at a smaller scale is one, but when the scale becomes big, and that's what we are looking at fintechs to create that depth and impact as such, there are a lot of other forces that has to come together. And for us, I think when we look at it from our own research, I think we feel that these are 6 factors that needs to sort of align itself to make this the wider adoption really happen. One is the confidence, because even today morning I was reading a article on the paper which says about digital payments, and one of the top asks from all the consumers, it has to be secure, right? And that assurance can be achieved through regulations and policies, giving them the confidence that, look, what I'm doing these transactions or doing these investments, this is safe and secure, it's within the policy framework. The second part is on convenience, and that's where, fintechs ace it, and they know the moments of truth where the customer is ready to put in that, invest that money or make that decision. And that's probably a sweet spot for fintechs. The third element that we feel is the connectivity, because that has really helped us reach these solutions to the widest possible geos within the country as well as the world itself. For the connectivity through the 5G and the telecom, that's really going to help take these products to the masses as such, right? And the fourth element that we feel is really, really necessary is competition, right? Because unless you challenge each other and looking at um, uh, we don't want anybody for taken for granted, like how traditional banks are taken a lot for granted with regard to the kind of incumbent customer base as well. I think we want people to look at value chain and see, is there an opportunity to disrupt, and then look at how can I make a change in that and create a unique, compelling offering or a product that investors can adopt, right? Retail investors can adopt. The fourth is around the collective intent. They say it takes two to tango, but I think it needs more people, the more ecosystem play to come in together. Because I could have my best phone, I could have the best app, and I'm all equipped to do digital payment, but if the merchant does not accept or the connectivity is not there, then it is as good as not being able to use the product. So I think there are multiple parties which have to come together, see the bigger intent, and then make that happen. And the fourth is the co-evolution that we sort of talk about, how both the underlying infra as well as the applications that sit on to use those infra evolve together, and each of them challenging each other to make sure each of these things become better. Like how these smartphones have evolved and their cameras evolved, and how new applications have come in utilizing those benefits as such, and they keep it's a loop back cycle as well in terms of how they push each other to innovate. The next one I want to talk about, we kind of talked about saying that this is not about having everybody having a common set of goals, right? It is about, because every region, every geo, every organization, every individual will have different sets of mental models with regard to how they can achieve moving on to a sustainable living. But what we really feel is there is both a top-down and a bottoms-up approach that's needed, right? And there is this controlling the supply side of things through the financing actions, as well as creating these opportunity with regard to funds and other things. The financial industry is already kind of championing it, and they are looking at how do we help transition some of these big corporations to a sustainable kind of a model as well. Or if there are physical risks that really happens, how do we help them manage, mitigate that? And there are actions being taken by central banks out there, corporates out there, and there are firms who kind of specialize along with climate science and other things. But we feel the academia has a bigger role to play, right? Because they are sort of creating the next generation leaders. I think the sensitivity towards it, and sensitivity towards the planet, sensitivity towards having equal participation in the governance, and ESG kind of covers it, and I think it goes beyond much more with regard to sustainability. And how do you bake these things early in the thinking process? Because that's very important. That's where academia comes in, the research papers, and how do you show that you really can make profit out of purpose as well? So those kind of business models have to evolve on that space. And definitely regulations with regard to, one of the biggest challenges has been with regard to data and the standards and how each other report as such. So that's where regulations and policies have a bigger play. Then there is a whole lot of individuals, I think, who ultimately control all these funds flowing into these big organizations through their investment channels, or deciding where they end up participating and what do they end up focusing on. And that's where you control the purse, you control the money, and that's where the financing, that's a direct impact on how these organizations look at sustainability. And the last but not the least is the bottoms up approach, right? The finance plus tech as a combined force is something that we are saying has a real foundation to play, and that's what is going to take this to a next level and create that multi-x impact, which is much needed for the way we are currently with regard to the situation. I'll quickly close this one. I just want to give some examples of where we come from and why we are so passionate about um, the technology and open sourcing. So if you look at Thoughtworks as a company whom we represent, we've been kind of championing these various options. And I think we believe in open sourcing these tools and make it available for the public good as well, right? And what we feel is we all of us will have to play to our strengths. And if we are a technologist, there are various things that are available for a technologist to look at how you bake sustainability in early on in a development engineering process, and how you help companies evolve to move to a sustainable model. So even there are carbon cloud footprint tools, or green software foundations that we are championing. I think we look up, given the paucity of time, I will really request you all to have a look at some of these things, and reach out to us if you need any sort of guidance in terms of how can technologists make a huge difference in this world of sustainability.